Hey guys, it's Max. Welcome back to the channel. Appreciate you guys being here. Hope your day's going well so far. It is about noon here in Hill Country. Beautiful Austin, Texas. Sunny fall day here. All right, we'll start with Defiance. I'll go real quick so we can get to Yield Max. I know a lot of you guys prefer Yield Max. All right, but Defiance, let's just go with just the facts. They're going for 1.1 million. They're realizing 500,000. They're up 28 cents a share on the month on an earnings per share basis with the dividend estimate of $1.76. 68% winning days, 32% losing days. Average profit per day, life of fund, or since I've been covering it, $107,000. Not bad. IWMY, these guys are going for 721,000 and are actually showing a loss right now. They're also down 63 cents a share on the month, but the dividend estimate's $1.70. You can see the up days and down days. Average profit per fund, life of fund, since I've been covering it in this one, is $15,000 a day. All right, now let's look at WDTE, which used to be JEPY. Okay, these guys are going for $420,000. Actually, and they're realizing a loss right now. They're down $53,000. Let's check. I think the market must be selling off because it was up just a second ago, or when I checked, yes. And the market is selling off. You can see the market opened underneath the profit box, rallied up, and then now it's starting to sell off. Rallied up to about the midpoint. All right, so they're down. These guys, WDT, down 20 cents a share on the month. Dividend estimate $1.57. I'm going to stop doing the old estimate. No one cares. Up days is nearly 70%. Down days 30, of course. Average profit per day, since I've been watching this one, is $50,000 or $48,000, which is about 5 basis points. Average profit per day, and not bad. Not bad. Okay, so now USO, these guys, they got some more money under management. Let's see how much it is. It's actually 9.25 million. Or no, it's the shares. I'm sorry, 13 million. They did have, well, they had 7 or 8 forever, and then they jumped up to 12, and then just the other day they jumped to 14 because they were running about 12, and now they're at 13.6. So they jumped to 1.6 million. What that allowed them to do is they were writing 1,600 puts every time. Well, they were able to write an additional 375 puts. So now they have a package of 1,975 puts they're writing. They've got to be some of the biggest option traders in the USO pit, I would think. I would think it's that big of a I don't know, USO, it's probably a pretty big ETF. One event. So these guys wrote the 74.5. They did it 1,975 times. That's a great year, 1975. Remember it well. And they wrote it for $1.76. So let's look at the chart. That spreadsheet doesn't calculate the prices live, but let's look at the chart. So, all right, when you sell a put, when you buy a put, quick refresher, bearish, right? So when you sell a put, it's bullish. It's kind of backwards to think of selling something but then rooting for the market to go up, and you sell something, a put, and most people think of a put as bearish, but which it is. So you're selling something bearish. So anyway, it's a bullish bet. So you want this prices to be above the strike price, which was 74.5 in this case. So there we go. So this fund's making a full profit today. The last option trade they did well on. This option down here, they did 1,600 of these. The market rallied. They sold them for like $1.22, and they covered them for a nickel yesterday. So that was basically a full profit. Now, these options here don't expire until Friday. So I tried to drag the box out to Friday. I misunderestimated, like my buddy my fellow Texan George Bush said once. Okay. Perfect. Okay, so now let's get on to Defiance. Thank you guys for to Yield Max. Thanks for being patient with me. So we're going to check out Defiance and just all the other things too. So here is the index covered call funds. Okay, let's see what's standing out. Let's see. iSpy is not really up. It's broken. I always say I'm going to take it off. I never do. We're just going to have to check iSpy manually. iSpy is a great fund. I hate that it's never the automation never works on the spreadsheet for whatever reason. I discovered something here today. I just didn't know you could check out AUM and everything right here. So iSpy has $250 million under management. Average volume. Beta. Beta is how risky it is compared to the SPY. And it's a little bit less risky than the SPY. 0.96. I mean, it's about 4% less risky. Less volatile than the SPY. Anyway, all right. Well, so that's iSpy. So iSpy is actually down 61 bips today, but for some reason the spreadsheet never picks it up. Anyway, so they're actually outperforming the index on the way down. Bad job, iSpy. Look at JEPI, also outperforming the index on the way down. Not a lot good to say today. XVOL outperforming on the way down. I'm surprised ZIVB isn't. Oh, there it is. We just got a ZIVB. They heard me. So ZIVB outperforming on the way down. It's nothing wrong with ZIVB. It's more volatile. It does better on the way up also. Relative to XVOL. KQQQ pulling back a little bit. I need to give Howard a call and get him on the show. I really like Howard from KQQQ's boss. I'm really looking forward to. I have an interview today with the guy from Accruance Capital that owns XVOL. There's only 7 million under management for XVOL, but it's a great fund. It needs to be way more than that. Anyway, be looking for that interview. You can see most everything's kind of pulling back today. Look at USOI's up. That's great. The only thing really just like getting murdered, I guess, is ULTY, of course. ULTY, IWMI, YBTC, not doing great. Okay, but now let's look at the single stocks. So this is the Yield Max universe. So we got a bunch of stocks down, nothing down more than the parent though, with the exception of BITO. We saw the other one, YBTC is getting killed. Okay, so now as far as ones that are up, nothing's outperforming the parent on the upside. But AMD and NVIDIA are catching a ton of upside, which they better be since they have call spreads on. The whole idea with call spreads is you ought to be catching a ton of upside. Now, I'm surprised ExxonMobil is down even though Exxon is up, and I'll show you why. All right, I put their trade in here. These guys, here's their covered call spread. I kind of had to estimate at their cost basis on the synthetic, but I put in the strikes. Here's the call spread they had done. They wrote the 115 and they bought the 118. So between 115 and 118, you have a ledge or a shelf where you're capped. So they had the prices had to shoot all the way through that ledge to the other side. But now we're back on the other side, just like having stock. It makes money 1-to-1 with the same way owning the underlying would, actually owning the shares would. So that's great. But it kind of surprises me that they aren't up more today. But that makes me think that they probably actually rolled this trade yesterday. And I don't know about it yet, but the people on the floor, the traders and the authorized participants know about it. And so that's why this one's not up. But this one's been doing great lately, but why it's not up today. But now let's look at, let's do this here. Let's look at all the other ones that are close. I mean, NVDY is having a good day, and it's catching, about 80% of the upside. of the parent asset. That's the whole idea. That's great, right? So let's look and see what these guys have actually done. Why they wrote the 167.5, bought the 175. Check this out. Build a covered call. Well, actually, I already have the AMD's trade in here. What am I even doing? Look at this. I did this one yesterday. It's up millions right now. Yeah, 6 million. Yeah. Okay, so perfect. Now you can see AMD needs AMD needs the price of AMD to go up some more to be able to capitalize on this call spread. All right. They need the price to be higher than 175. And in fact, they stopped making extra money between 167 and 175 because they hit the shelf in this trade. Now, I just love these trades. The other thing I love is if yes, held to expiration, it has a flat spot here. And the flat spot is where you're paying, is your disadvantage in the trade. That's where the trade's costing you money. If the market lands right on 170, right here, it's the worst relative. Right on 175, it's the worst relative outcome for you if you've done this trade. Okay, so let's look at other call spreads. So ExxonMobil is in the money, or as of yesterday it was. Like I said, I bet they've rolled this. I just haven't got the most recent trades yet, but the people on the floor know. Okay, so who else is close? Well, Fibby. Looks like Fibby and GUI. So let's look at Fibby and GUI. Of course, Fibby trades options in Meta. Meta's up today. Up and looking strong. And then there's GUI, which trades options in Google. And it's up today as well. And in fact, in Google, they sold the 165 and they bought the 167. Now, I just did it for one contract. Obviously, they have multiple contracts on, but they put themselves in a position, and they're in the position now where they're going to make money, but they won't make any additional money unless the market goes over 167.5, and then they make additional money over what they can make right now. The downside of this trade is, or what they're trying to prevent, is they don't want the market to drop more than about 0.75%, in which case they would have a loss. But they have a nice, they're right here on the ledge right now, which is a good spot to be in. We'll see. They need to stay on the ledge and not fall off the ledge. If they fall off the profit ledge, that's no good. But they can also crawl off the profit ledge on the other side of the mountain, and that's the idea. So we'll see. We'll see. So let's look back at the market. Okay, so see what's moving today. VIX, which is volatility in oil, is up today, but also NVIDIA and AMD. And then pretty much everything else is down. Tesla's down, 3%. MSTR's down. That Tesla's chart doesn't look good, of course. Amazon pulling back 1.5 today. Amazon's been showing some bearish momentum ever since last week. Got outside of the Bollinger Bands and started trending down. Hopefully they'll find a bottom in here. Maybe today was the bottom. We'll see. Of course, ARK is down a little bit also, Coney and Russell. Okay, so now let's look at Max's volatility metrics. So this is just a trend following system that tries to see if people are putting on, especially professionals, are putting on or taking off hedges. Well, right now and all week long, professionals have been putting on hedges. What happened here? It looks like something disappeared. that happens every once in a while, and I have to rebuild my thing. You know, I had that nice color coded thing here. You guys remember what that looks like? I can't figure out how to make it stay. About every two weeks or something, I have to redo it. Well, anyway, it's bearish. It's bearish right now. So, and of course, that's volatility. That when that goes up, it makes my system turn bearish and would indicate the market's going down. And of course, the market is on the lows for the day. And the market has been kind of generally choppy to down this week. So we'll see what happens, but stay cautious in here. I'm going to get out of here and go back to, and I'm going to have to rebuild this, put those colors back in there and everything where we can see, you know, what's going on. But I'm going to do that. And then also I have an interview today with the guy from XVOL, and well, two people that are involved with XVOL. So I'll have some content on that coming out soon. So be looking for that. All right, guys. I appreciate you guys for being here, and you guys have a great day.